Good morning and happy August to you. As always, I hope this morning finds you doing well. Times they continue to be really interesting, don't they? One of the topics that we've talked about inside our firm, we always have this conversation, but maybe more so over the last 6 months, is the idea of cash retention and cash generation. Cash is the single most important word for any business. We know certainly that the old adage, without a sale, nothing can happen, is true, and that expense management is a must. But without cash, having that cash in the bank and strong cash management, you can quote, make all the money you want. It's called profit. It's an accounting term. But if that profit doesn't, or the most of that profit doesn't end up in the top right hand corner of your balance sheet, page one, really it's all for naught. We've not done anything to generate any value or cash generation for our company. Cash management certainly is vital for our company. We forecast our cash flow daily, weekly, monthly, quarterly, annually. We look at where we can find ways to free up cash and to generate more cash. Productivity of our personnel, collections of accounts, and quality of work, so we don't have to go back and redo work, or the areas that we focus on to generate the strongest cash flow possible for key advisors. Cash management has also always been at the core, it's been the focal point of our services to our customers. The profit calculation that we talk about a lot revolves around the ability of the dealership to move assets up on the balance sheet side from inventory to receivable to collected cash in bank. And our total absorption calculation includes expenses, and expenses is an outflow of cash. So cash is what the focus of when we work, of what we're trying to do, generate more cash. There's three significant types of cash, operating cash, for a dealership, not including receivables. And these areas, they include used truck inventory, parts inventory, and technician inventory or work in process. Used truck inventory is typically the largest single area of a tie-up of cash. It also is the largest contributor, by what I've been told by our used truck experts, of businesses going out of business, dealerships going bankrupt. Most of the time, the reason we have cash tied up in inventory is because the truck has been acquired at too high a value, and so now the value exceeds what the market is. We put too much reconditioning into it, so now again the value we have on the books of the truck exceeds what the market value is, or the truck becomes old. And of course, salespeople walk around the truck, and the value now, the real value of the truck, falls below what the value on our books are. And so instead of trying to recoup that cash as quickly as possible, first loss is the best loss, the truck sits trying to find the right buyer and only spins downward from there. Parts inventory certainly is another area that can suck up cash, and in many cases, it can be almost as large as used trucks. When looking at parts inventory, there's three questions that you need to really start to ask. One is, what parts should be on the shelf, and why are those parts not there? Okay, why are the parts that we're selling not on the shelf? On the reverse side, why are certain parts on the shelf that should not be on the shelf? Demand says that we haven't sold enough of these, so why are they there? And then why are there, quote, too many of these parts? If you have a deep understanding of demand, also with the understanding of how inventory works and the calculation regarding day supply and pack quantities and required orders and things like that, you can build a model inventory. If you do build a model inventory, that can start to be the focal point of a part strategy to get the right part and the right quantity on the right shelf at the right time at the right cost. That all improves fill rate, turns, personnel productivity, and gross profit margin. Thirdly, we talked about the technician inventory, work in process, if you will. Too many times hands are thrown up when they reconcile the monthly open repair order report with the general ledger work in process, saying, I don't know where this tech time is going, so I'm just going to write it off. Or we don't even pay attention to it at all, and both those are a mistake. Not understanding where that tech time is going and why, that root cause of why, is a significant drain on the cash of the dealership and also possible labor sales, gross profit. The process to reconcile and manage time is vital for any dealership in regards to cash generation. You know, cash is a wonderful thing. It's the lifeblood of any business and really of our lives. I mean, in terms of the economic activity of our lives. There's many places, however, that inside of a dealership that cash can be freed up to do its best work for your business. We'd love to help you find that cash and free it up for you. You know, again, I'm just very grateful for you taking time to listen and read my blog. There's a lot of things that are out there right now that you could choose to read or listen to, and you chose to take 5 minutes out of your life to read this or listen to this. So as always, from Key Advisors, good luck, stay well, be curious. Life is just wonderful. Thanks again.